when you're going to invest money, I know most people just think, okay, investing equals stocks, but stocks are companies. And most of the time we're convinced that, oh, well, those people are so smart that build the companies, and so I'm just going to put my money with those companies because they're going to grow the money. But what if you considered yourself? What if you looked at smaller businesses? What if you considered acquiring a business? I mean, maybe you're in a job that you hate. Maybe you just don't enjoy what you're up to. There's not a lot of upside potential, and you're just trading time for money. Well, one of the guys that can help you escape it is Walker. So Walker wrote Buy Then Build and really brought this conversation to the masses about what it looks like to acquire businesses, which seemed out of touch, out of reach, like just not something that the average person can do. But the reality is, if someone could get a student loan and go through school for 4 years and get a degree that isn't really helping them earn more money, the payment on a student loan versus getting a payment on a loan for a business might be a consideration. Just saying. So, and talk about 4-year education. Maybe it's going to take you a minute to figure out how to manage this business and grow it and do that kind of stuff. But it's just indoctrination. We're like, oh, go to school, and I don't know how that even exists in these days. I get it back in our day. Oh yeah, get good grades, go to school and get a job. Nobody's staying at a place long term anymore. There's so much turnover because people are disengaged with the work that they have, or they got checks during COVID, so they thought, why go to work when I could just get paid for staying home? We're kind of on the other side of that, and it's like, what are people going to do? You know, this whole great resignation. Well, the reality was people just had crap jobs, and now there's more options for them. But what if you create the job that you want? Like my son once said, he's talking to my wife when he was really young, and she's like, well, Dad didn't think there was a job out there for him, so he just created his own. He's an entrepreneur. He's like, what? You can create your own? Well, and it's maybe hard to start from scratch, but might not as hard to get an SBA loan and do a down payment. And, you know, even people have funds in their retirement plans that could be that down payment. Sure, there's a 10% penalty, but if I was willing to lend you money at 10%, but you only had to pay 10% the first year and it was interest-free the rest of the life of the loan, how many times would you borrow from me?
As much as I could.
Right. Okay, so let's talk about how do people go about considering businesses? What are the things that they should look out for? What would it take for them to acquire a business? Let's give them kind of the basic 101 here.
Let's back up. Okay. I want to back up. Great. Let me ask you a question, Garrett.
Okay.
Which is,
why am I drinking from this cup? Because that's what Trisha brought me.
It's all right. I got this one.
It's very colorful. I'm supporting.
Made quite a pair.
Supporting the rainbow today.
Listen, if you are financially driven, okay, if building generational wealth is something that you're interested in, how important is it to be a business owner or an entrepreneur?
It's critical.
Critical. Would you say it's foundational?
I mean, even if you're just investing in real estate, that is your business, and that becomes a business.
Agree. If you're doing it right.
Yeah, if you're doing it right. If you're doing it part-time, you might get in trouble. But yeah, so, I mean, I know that there's the exception to this would be people that climb the corporate ladder and get stock options at a corporation and that kind of stuff. Sure. I just don't want to live that life. That doesn't sound exciting to me.
I mean, it's one of these things where business ownership is the little thing that makes the big difference, right? Yeah. I mean, like if you want to build wealth and if you want to have impact in your life and you want to have impact for your family, okay? I mean, it seems to me, and you want to do the things that you want to do and you want to like create freedom and all the rest of it. Owning assets that cash flow and appreciate is the game.
Yeah.
Period. Right? You often say what? Businesses, real estate, IP, right? Yep. So you know, this asset class is just so important. And I mean, when you go back to, you know, when I first started getting this idea of, okay, I'm going to buy a business rather than starting a business, is because I'd started a business or two and like they just fit, like I'm a really bad entrepreneur is basically it. Okay. And, I was in entrepreneurship concentration during my MBA. I was in business playing competitions. I went to one of the top 10 accelerators. Like I did all the entrepreneurship shit. Everyone I hung out with was an entrepreneur. And when I started acquiring businesses, I bought my first one in 2006. All of a sudden there was this divergence between me and the other entrepreneurs that I hung out with, right? And I started getting introduced as like, hey, this is Walker. He buys and sells companies. And although that sounds totally baller, it was one of these things where I realized no one really understood what I was doing. And the entrepreneurs didn't understand that I was also an entrepreneur doing what they were doing. I just wasn't starting from scratch, right? I was starting with a business that had revenue, infrastructure, customers, experience, product market fit, cash flow. And the difference between raising capital or investing in a sort of startup company is that, we're projecting some future valuation and then reverse engineering what the valuation is today at a discount so that I can get you a good return on your money on this thing that hasn't been built yet.
Yeah, and I don't love investing in, I don't love the thought of buying or starting some company that doesn't think about cash flow and is just trying to exit. Like these tech businesses.
Totally.
Where it's like they're hemorrhaging, they're raising funds. There's people are working, they're sleeping on the floor. They're like wearing it as a badge of honor, and then most of them fail, but you hear about the few that succeed and you're like, oh my God, I'm going to do that. I'm going to go give my whole life to something that's not going to work out.
Okay. So when you're an entrepreneur, startup entrepreneur, right? Like the golden ring is like, I got venture capital money, right? Like I got Sequoia cash.
Which is like venture capital is so scary. It's scary because
it depends on your investor DNA.
Right. But a lot of venture capital, their philosophy, depending on, is we're going to invest in 10.
Yep.
And we're going to keep 1.
It's
maybe
more like
3 at most.
It's more like I'm going to invest in like 40.
Yeah.
And like 38 are going to go to shit.
Yeah. And then these others are going to be exponential growth and it's going to make it worth it. So like there's businesses that are doing okay that venture capital squashes.
Yeah. So VC, based on all of my research, back in really 2018-19 when I was writing Buy Then Build, what I figured out was that 75% of VC-backed startups went completely to zero. Not like I just broke even on that one.
That's a huge number.
Zero.
75%.
75%.
And these are smart people allocating capital.
Smartest people, most vetted people in the
but
world.
But also willing to just go, we're going to ride this winner and forget everybody else. Yeah. And maybe some of them could have made it if they didn't take the VC.
Yeah. So I know that you dislike Wall Street bankers. What I'm going to tell you is venture capital is the same thing.
Worse.
It's just a West Coast version.
No, it's worse, yeah.
Yeah. So we think of, like getting VC
That's
money.
why they call VCs snakes. I mean,
vulture capitalists, right?
Yeah.
But it's like we think that, this is the entrepreneur game and this is the best game the entrepreneur can play at the highest levels. It's really just a venture capital game, and they're riding on the backs of all these people, and they know that 3 out of 4 of them are just going to die. So, I kind of lost my train of thought. We're
talking about like if someone's going to start a business versus buy a business, and what are the steps of buying that business?
Yeah.
So, and what should they be looking out for, and how would that happen?
So one of the motivators for writing Buy Then Build was really just to convey to other entrepreneurs, like, look, there's a different way to do this, and acquisition is equally as important as innovation. Okay, I'm not saying it's better, but we know that buying a small business when compared to starting a business from scratch, it's literally like instead of a 10% success rate, it's like a 98.3% success rate. Okay. And we know that owning a business is the little thing that makes a big difference in going with generational wealth. So your question becomes, how do we do this, right? And there's sort of 3 ways to think about it, right? The first is kind of like a traditional search fund. The second is like a SBA acquisition, which is really where I kind of live. And then the third is independent sponsorship. All right. So let's talk about this second option, right? So the concept here is, only 4% of companies in the United States ever exceed $1 million in revenue. Instead of having this future-based valuation that like these startup has, you're buying and they're exiting. So it's a historical-based valuation. Okay. So you look at a business that's doing like 1, 2, 3, 5 million in revenue, for example. Okay. These are some of the most exceptional companies in the country. Okay. Very low bar for such an exceptional rate. And you're buying them on historical valuations. So $1 million revenue business, you might be buying that at like a 3 times earnings. Okay. For anyone listening who's doing real estate, I want you to translate that into a 33% cap rate, right? I mean, it's like
That's insane.
Yeah. But the little difference is that like businesses can go to zero, and businesses have infinite upside, restricted only by the total addressable market, right? You know what I mean? But like in real estate,
more downside, more upside,
right? Whereas real estate's a little tighter, right?
Right.
The thing is like most people, as I started out and going through trying to buy companies, I noticed a few things that I felt like everyone was getting wrong. Like every time I started talking to a broker, they would ask me like, okay, well, where'd you work before? Like, what'd you do before? What experience do you have? Da, 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 da. And I think like a lot of 20-year-olds, you sort of like grab opportunity where you can, right? And so by the time I was buying a business when I was 30, I was like, I could care less about what I've done in the past. What I'm looking for is an opportunity that like, I don't care what industry the business is in. I almost don't care how much it is because
they're not asking you what degree you have or experience. They're asking what money you bring to the table.
They want to know what money I have and what jobs I had in the past, like what relevant experience, right? And then they're trying to figure out what industry based on whatever I did before. I felt like it was backwards. So I first started out writing Buy Then Build. I really wanted to write like a Jim Collins style book, okay? And I went out and I just interviewed like 75 people that had done this before. And I realized a couple of things. One, Jim Collins has like 27 Stanford PhDs doing research for like 4 years. Like there's no way I'm going to be able to get to that level of, research. But two, every single person I talked to would start by saying, I'd be like, what were you looking for? And they would say, oh, Walker, I was just looking for the same thing everyone else was looking for. I was looking for, and then they'd say something completely different. And so that's when I realized like this industry is so opaque and so fragmented. It doesn't really need a Jim Collins style book yet. What it needs is frameworks for being able to understand what the F I'm looking at and how to evaluate it.
Let's talk about some of those frameworks.
Great.
Yeah.
The two big ones are the prep funnel and the AE matrix, okay? The prep funnel is really just reversing all of these things that everyone gets wrong, right? Instead of looking at the business as a thing that's generating money as if it's just going to continue when that seller leaves and you take over, I want you to reverse it and figure out like, okay, the entrepreneur needs to be first, okay? So it's the 3 A's on the top of the funnel, attitude, attitude, aptitude, action.
There we go.
Thank you.
Good that you have alliteration to remind yourself.
Sorry, I'm a little. I'm at altitude. Forgive me. So attitude is just the sort of like when I talk to groups, like sometimes like I'll get like an MD that stands up that's like, how do I even know if I have what it takes to be an entrepreneur? You got to get over that. You got to have the growth mindset. You got to have all that stuff. You got to have what it takes. You got to be driven in the right ways. 2 is aptitude. What am I good at? Like what strengths do I bring? Am I a revenue generator, profit maximizer, et cetera, et cetera? And the third one is my action. So it's sort of like, kind of like a lot of what you talk about. It's like, what do I want my day to look like? Like I used to race road bikes, Lance Armstrong style, Missouri State champion.
Doped up?
Yeah.
With one ball?
I would shoot the syringes right in my thighs at the start line. And, but like, it's one of these where I loved riding my bike. I loved riding my bike as fast as I could go. And working at a bike shop sounds terrible, right? It's like you're selling bikes. You don't leave the shop at the good times to ride. So just because it has bikes doesn't mean that you have any interest in it, right? So what do you want your day to look like? Engineer that towards an opportunity.
Okay. Got it.
From there, it's industry and size. But let's back up to opportunity. Opportunity not only takes into consideration what it is that you are able to do, okay, and the value that you bring as the new CEO and owner to the table. But the AE matrix outlines 4 different quadrants, right? So I have an MBA, so I had to have a book. I'd have 4 quadrants in my book. Okay. So, but basically it's kind of like growth and value on the axes, right? And it's sort of like, eternally profitable, turnaround, high growth, and then what I call a platform business.
What's platform business?
Okay. So it's not what we think of when we think of private equity. So when we think of private equity, when they're doing a deliberate roll up, they'll go out and say like, all right, we just need that first one. And then they'll use that first one as a platform business. And then they add on to it to roll up into a bigger business and exit, right? In my case, what I'm trying to explain here is that everyone's trying to figure out, how do I buy a business for a low price? How do I buy a business that has no risk, right? And you and I both speak frequently about how all the risk is actually in the entrepreneur and not in the business itself, right? And so the thing is like a platform business is that one where, you and I each look at a business, okay? And you're looking at it like, it's okay. And I look at that and go, yeah, the business is okay, but my skill set is the thing that can take this to the next level, right? So it's more aligned with finding that actual diamond in the rough and it's minimizing the sort of like market influences on the valuation of the entity, right? So the more sophisticated investors say, do not look for that, average business with a low price, okay? Find that excellent business at a high price and be prepared to pay it.
Got it. So this AE matrix.
Yeah.
What does AE stand for again? I know you got the 3 A's.
Acquisition entrepreneur. Sorry.
Okay, acquisition entrepreneur. And then you got the 3 A's with aptitude and action and attitude.
Yep.
Not in the right order.
Right.
But I still got them faster than you did. You wrote it. All right, so someone's looking to buy a business. What do they want their day to look like? What type of business are they going to get based upon the skill set that makes that a better opportunity than it would in someone else's hands?
Yep.
I have someone that's done an immersion with me long ago, and their whole philosophy is they go buy epic restaurants, like where close to downtown, close to a beach, been around for a long time, usually diners, but like lines around the door, and then they just know how to implement to make that even more profitable.
Yes, right.
Right, and they know real estate first, and then the business second. So it's like he could just go in and do that all day long because he knows where they don't understand labor or what part of the P&L that they're not seeing and how they can improve things. So it's that's a perfect example of how he's just
platform
on an acquisition path.
That's right. So and again, like the other quadrants are really just made up of how people kind of approach the market, right? And also I want people to understand when they're looking at a business that's maybe listed for sale, you need to figure out, what am I looking at? Like, which quadrant is this, right? A high growth company is one that is going to be in high demand in the market. It's going to come with a high price tag. There's going to be great growth year over year. And like, you better just make sure that once that seller leaves and you take over, that you can continue to do exactly what it's doing. That's where the risk lies in that model, right? The turnaround. So most of the time, first-time buyers will take to the market like that real estate adage that you make money when you buy, okay? Almost all the time, that's backwards. Like, you actually make money when you sell in businesses, okay? Because the upside is so unlimited, right? But in a turnaround, that's the one instance where it's opposite. You make money when you buy. You got to be careful because those are the things where you need to get in there. You need to restructure all kinds of, old debt with suppliers and it's hard. You got to build the entrepreneurial culture. You need to like really get in there and manage and lead and turn that ship around, right? But the other one is just eternally profitable. And what this is this is that segment of businesses where there's no real technological alternatives coming in. Like there's no trends that are looking like it's going to upset it, right? So for example, I'd love to think that film photography could have seen that digital cameras were actually getting really good and coming in real fast.
Like Kodak really struggled. They were a paper business, right?
Well, they actually invented the digital camera. Kodak did. Did you know this?
So
and
they put themselves out of business?
Yeah, they kept it out of the market because they made all their money on
paper.
Well, on do you remember those
on film, right? Like
film,
yeah.
Film development, right?
Yep.
So they were selling the actual film, and you
buy that's recurring.
Walgreens or whatever, and then you would take it to those little places and have it developed in an hour or whatever. You circle back around, whatever. But so they kept it out, and because they didn't want to cannibalize their business, and then they ended up moving into digital printing because like they completely bombed out. Anyway, the point is the opposite of that, right? So no technological innovations coming in. I want you to think like snowplow. I want you to think like landscaping. I want you to think like even like laundromats. Like I actually view that more as like real estate than an actual business. But like the point is it's almost the epitome of the eternally profitable. Like people are going to wear clothes, people need to wash their clothes, and people need a laundromat, right? So it's like that's that kind of example where it's like, okay, can I get recurring revenue? Can I get repeat revenue? How stable is the business? Like, again, limited upside, right? To say a platform company, but one that has a little more security. And so
for someone that's a very first time purchaser of a business and doesn't know a lot about what they're doing and wants to get an education in a way that's less risky.
Yeah. So, well, and I think there's a draw to that, right? But the thing is like, when you look at the entrepreneurs coming out of Silicon Valley, when you look at the entrepreneurs that we hang out with, most of them are not trying to figure out what can I do that's safe.
Right.
Right? I mean, you don't get into it because you want to be safe. You get into it because you want to have impact and growth and wealth and lead teams and do awesome shit. And I think that there's opportunities.
Very similar to my DNA concept of investor, right? It's
Totally.
it's your business acquisition DNA, essentially.
Totally. But I mean, it's like you can still have fun buying a snowplow business. Like, I mean, there was the New York Times did this article on these two venture capitalists that like went rogue and bought this snowplow company in upstate New York or whatever, which I would imagine would snow a lot there. But it's one of these where they don't have to work the whole year.
Yeah.
They could acquire in different cities, and so it's a little bit more calm. But the point is like they probably got their entrepreneurship hit working in the VC space, and now they're like, whoa, dude, I just like, so were they overcorrecting? It's up to the
personal
buyer DNA, right?
Yeah. So great. Well, gives a really nice framework and understanding. Glad that you gave us 4 quadrants around growth and value. But it is more digestible that way, and it's good to understand the types of businesses that are out there. So as you're considering maybe acquiring a business as one of the big 3 assets that really drive the most cash flow and wealth, if you're considering legacy or changing the game for your family now and moving forward, or even wealth for your own life, like this is a consideration. So thanks, Walker, for giving some insight and illuminating some of these models. I appreciate it.
Thanks so much for having me, Garrett.